Hey, it's Andreas and I've been investing for over 10 years. In today's video, let's take a closer look at Orion Office REIT. This REIT was spun out of O Realty Income back in the day, and it's just a REIT containing their old office buildings, basically, making them a separate entity. And as you can see, since they were spun off, the stock price is down 83%. And some of this is due to bad performance, as we will talk about. I listened in on the earnings call for the full year of 2023, and the future guidance there, it matches the performance that we've been seeing so far. But there's a light on the horizon there as well. However, the second part of the trend is that when a spin-off happens, it tends to drop a bit, as we can see here early on, when all these shareholders of Realty Income all of a sudden find this ONL ticker in their portfolio and they're thinking, how did that get there? What's going on with this? I don't want this stock, this REIT. Let me just sell it. And then the price tends to dump a bit after a spin-off. But in many cases, if it's a quality move, it tends to recover. However, as stated in the company's earnings, they have a bunch of trouble on the horizon. And with regards to this is the vacancy rate of their properties, which was 80.3% at the end of the year that was occupied, so a vacancy rate of almost 20% in this case. And they have the strategy to try to sell off the vacant properties. There's a maintenance cost to the vacant properties, 11 million, something like that they expected, so not too bad. But this is a small company, market cap 230 million right now, with a yield of 9.71%. Market is clearly pricing in this yield to be quite unsustainable. However, is this really the case? If we look at some statistics here from ONL, we can see, for example, in terms of valuation measures, just comparing market cap to enterprise value, we get a nice picture of debt to equity ratio, and we can see that they're not that heavily leveraged. And the indicator here, the clue to this, was also in the earnings call where they talked about having a strong balance sheet. And I think that these numbers are indeed quite solid. They are not super dangerous, they are not over leveraged like some other stocks we've seen, but they are in a sector that's massively out of favor with the remote working model. Although, as of recently, we have seen Amazon flagging for a 5 days in the office work week as of 2025. And I think that companies, they prioritize control in many cases, and they will like to see people return to the office. I think we will see a hybrid model as well going forward, with some need for offices still. So I think that the market is viewing the future business outlook of this stock very, very pessimistically, and this is also priced in. We can see that the price to book ratio is extremely low. This was the same for MPW when they were severely undervalued, in my opinion, at $3 something. Look at them now, trading at almost 6 as I'm recording this video on the 23rd of September. So we can see that the prices are indeed quite cheap if we look at this valuation. Another very important thing to watch is the cash flow statement of this company. We can take a quick look at revenue as well. You can see that they have been dropping from 2022 to 2023, and this is a result of selling off some properties. They've also flagged for more leases coming to an end here in 2024, and that there's a risk of them not being renewed, but then that as we go into 2025, then the worst will be behind this stock, basically, according to management. Balance sheet, no need to look at that. We know the debt to equity ratio in this case. We know the debt amount, but we can take a quick look at cash flow as well. And we can see that operating cash flow is positive, although it's been decreasing here from 2022. We can zoom in on a quarterly basis and we can see that cash flow indeed is holding up. They're not losing money from operations. And if we take a look at investing, alright, they're doing certain things to the properties, required maintenance, this type of activity, investing into the business. And then we have financing, and if we drill down here, we will see repayment of debt and we will see the dividend as well. So net cash dividend paid here, you can see it's a very expensive post in the cash flow statement. It's a large part, but then they also pay back some debt. We can see a quite solid end cash position in this case, holding through quarter over quarter. So this stock, I don't love it, I don't hate it. It's high risk, it's potential for high reward. The stock has been severely punished for a long time. I will have this on my watch list. We're seeing rate cuts now, and we're still not seeing the stock lift as we've seen other REITs do. Well, that's because the office sector is still heavily out of favor with a hybrid working model, this being priced in. So if we continue to look at the vacancy rate at this company and see if they're able to lease out and if they're able to just fill up those offices with tenants and collect some nice cash flow, well, then there's a nice buying opportunity for us as retail investors. Why do I say that as retail investors? Well, this company is only 230 million in market cap. No hedge fund, no big institution is going to look at this stock. Some have a criteria that it needs to be at least 5 billion in market cap for them to even do analysis on it or cover it, even consider investing in it. This company is so small and insignificant that it does not make sense for an institution to buy it, add to it at this stage. It's just so cheap, so it makes literally no impact on their portfolio size. If they were to buy it and it were to outperform or underperform heavily, it would make no significant impact on returns, because this small size, it's insignificant. I hope that makes sense. So this is an interesting company to keep on the watch list if you believe that the working from home trend will change and we will go back to more of being in the office. Well, then this is a potential play to make money from that trend. Alright, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.